Read disclaimer carefully before taking any decision. The primary advantage of investing in individual small cap stocks is significant upside growth potential that is unmatched by larger companies. Small cap companies are often young companies. They tend to have strong growth potential, but also generally have less stability and market share than larger and more established companies. Actually, investing in small cap stocks may be comparatively risky, but the reward can be greater. One of the best segments of the market, a group of stocks that has beaten the market by 88% over 2 decades, is almost completely ignored by most investors. In this video, we will show you why small cap stocks need to be a part of your portfolio and how to find out best stocks. We will then reveal 3 small cap stocks picks, one of our favorite stock sectors. And as well as we are talking small cap stocks to buy today on Wall Street Ruler, we uncovered some big gaps in our 2021 multinational portfolio. When we did that review, almost a third of our portfolio, 28%, is in healthcare center stocks. Hey guys, this is Wall Street Ruler channel. Thank you for spending a part of your day to be here. If you're not a part of that community yet, just click that little red subscribe button. It's free. Leave comment below, click on bell icon, select all, and you will never miss an episode. As well as you can get some services for free via phone call, email and chat. Examples: market updates, latest opportunities in the market. You can learn money management from us. We can teach you how to investigate if your platform provider is real or fake, and you can learn how to check if your platform provider charging hidden charges. And we overweight in financials, energy and communication, and while we like all 4 of these sectors, we have got almost nothing in 2 of our favorite for the year stocks, industrial and basic materials companies. After positioning early stocks of financial and energy companies, the portfolio is up to 37% so far and beating the market up to 26% this year. But now I think stocks in the industrial and material sector could be the next to really take off. Both benefits from the moderate inflation and the kind of economic growth that we are starting to see. So we wanted to use this June video, fill in those gaps and 3 stocks to the portfolio. But not just for the sake of getting stocks in these 2 sectors, we want to find out 3 stocks with not only that sector upside, but also the potential for even higher returns. In this video, we will show you why small cap stocks need to be a part of your portfolio and why they beat the market return. We will give you a step-by-step to finding the best small cap stocks to buy and then reveal 3 small best buying right now. First stock is Nexa Resources, ticker NEXA, N as in Nancy, E as in Echo, X as in X-ray, A as in Alpha. Nexa, a 1.3 billion zinc miner with assets across Latin America. Now Nexa is the largest of the small cap stocks that we will look at, but still very much a small miner compared to like 32 billion Freeport McMoran. And still the company is 5th largest producer, with the mines in the Peru and Brazil producing over 500 tons in the first quarter, while zinc might not get the attention of copper or gold out there in the markets. Appreciate our efforts with like button. It feels valued and drives us to do our best. The information contained herein is generic in nature and is meant for educational purpose only. Nothing here is to be considered as an investment or financial or taxation advice. Readers are advised to exercise discretion and should seek independent professional advice prior to making any investment decision in relation to any professional product Wall Street Group is not liable for any decision arising out of the use of this information. It's a key component in construction and automotive, two industries with a great near-term growth. About 170,000 tons of zinc is also needed each year in those renewable energy products as well, so lots of growth and demand is there. The company has pipeline of development mines as well, helping it to keep up production growth. As prices head higher, about 2/3 of production is from zinc and another 16% from copper and 13% in silver mining, and like almost all commodities, these have since prices take off over the last year. Zinc is up over 108%. Since the beginning of 2020, the price of copper is up 161%. The company has a strategic advantage in its melting operations, with 52% of that source input from own mines. So it's got a strong vertically integrated position. The company reported 36% year-over-year revenue growth last quarter to $603 million. Though the quoted disclosure did hurt last year, getting back in track, booked $2.1 billion over the last year, and the balance sheet is little shaker. Here then what we usually like to see in these small cap stocks. Now Nexa has $1 billion in balance sheet cash against $1.9 billion in debt, but there is no major debt maturities until 2027 and its cash flow business. There is a plenty of assets here and the financial flexibility, so we are not too worried about that debt. And besides, its position is that material sector, and again we love this sector for this year and the next valuation of this stock. Insanely low share trade for just 0.63 times sales versus an average for the mining industry of 3.1 on a price to sales basis. That lower valuation is mostly due to its mines in Peru and Brazil, and those countries being so far behind most other countries and dealing with pandemic, but they are started to turn it around. And when that happens, a lot of value gets unlocked from these shares. Now Nexa is actually on the high side of what we usually consider a small cap stock. But there are some real opportunities in these smaller companies, so we want to explain what these are and how they tend to beat the market. When we talk about small cap stocks, we are usually talking about the company's market size. Market capitalization is the total market value of the shares. So it's the share price times all the share available. And investors usually think of this in four sizes. Mega cap companies are those worth more than $300 billion. So you have got those huge companies like $1 trillion, Apple and Facebook, large cap companies, and pretty big too though, with a size from 20 billion to 300 billion. Then you have got the mid caps, which are generally between 2 billion to 20 billion, and then the small cap stocks between 300 million to 2 billion in the market cap. So small cap companies are not quite as risky as some of the penny stocks that we are covered on the channel, but still small enough for more flexibility. Versus their larger establishment players, they have grown large enough to find that segment of the market they can focus on and serve its customers better, and that what make these such a great investment. And small cap companies can focus on a specific niche of the market, so a segment of the whole, and then serve those customers better than a larger company serving the entire market. And some of these is just a law of large numbers. A large $20 billion company with $5 billion in sales, it needs to target every part of the market, but a smaller company that's only building from a base of maybe 500 million in sales, It can focus on that niche segment to take share away from the bigger rival. It might only be able to grab another maybe $100 million in sales, but that's still 20% growth versus the bigger company that would have to increase its sales by $1 billion to see that same level of growth. And the proof is the return of the Russell 2000 index of small cap stocks has beaten S&P 500 by 88% over the past 2 decades. There are periods of underperformance. A small cap stocks tend to do worse in the recession or a crash, so you see that narrow in the chart from 2008 to 2020, but over time small caps build on that outperformance for higher return. Next on our small caps list is PA&E Incorporated, ticker PA&E, a $773 million provider of operational and outsourcing services primarily to the US government. This company has 5 segments in which the company operates, from intelligence and technology services to business processes, logistics, and engineering. In 2020 and 2021 revenue for each segment, we see about 50% of the revenues come from that infrastructure and engineering. The margin profitability on each segment, so a little lower margin on the 2 biggest segments, but stronger profitability on other. That's actually where the growth is. As well, the company recently confirmed its 2021 guidance for $3.1 billion in sales and $120 million in operating cash flow. And now for a $773 million company, a company that small to be producing over $3 billion in sales is very rare. PA&E has a project backlog of $7.9 billion and revenuing 93% of its contracts with the government when those are completed, so it's strong outlook for future revenue. The company is also improving its profitability, improving that earning margin by 0.6% last year to 6.6% with a long-term target of 8% margin. That $3 billion revenue target would be 14% growth from last year and means the shares and trading for just 0.25 times on a price to sales basis. That is half of the average price multiple on the closest comparable. Like a Vectress, which is ticker VEC, trades for 0.4 times sales, and Acom, ticker ACM, which trades for 0.7 times sales. In fact, these stocks could come up 50% and still be a better value from those 2 closest competitors. We have still got smallest of the 3 stocks to highlight, but we want to give you those 3 steps to finding the best small cap stocks. 3 factors to watch for picking these stocks. First, you are looking for companies that growing their revenue for year after year, and not just that total sales but also cash flows. You will find revenue reposted on the income statement and can look at the statement of cash flows. For that trend is operating cash flow. This is really where it has to start, right? The smaller companies are not coming into virgin product market, so they are competing against big established players. If that small companies cannot develop some kind of an advantage that comes through in higher sales, then it sunks before it gets off the bay. We also like to see improvement on profitability. Specifically, each year the operating profit margin gets a little higher. Remember that operating margin is just the operating income, so what's left over of sales after paying all the business expenses that divided by sales. So not only do you want to see a company growing its sales, but you want to see it's getting more effective profitability doing it. Put these together and that company is going to be on the path for higher earning and returns. Finally, here for small companies, We want to look into financial report and find the addressable market, so kind of a comparative advantage. This one is more subjective and it's going to take a little more research. But what we are looking for here is the management plan for competing against those big establishment players. We want to hear that the company is targeting a smaller segment of the market for that product, and it has a plan for how it's going to beat the big dogs in that segment. Now, what we don't want to see here is a smaller company just trying to compete against Goliath and serve the entire market. Most small companies just don't have the financial strength to do that. It's just not going to happen. The smallest of our small cap stocks we can buy now: US Express Enterprises, ticker USX. The company is the fifth largest asset-based truckload carrier in the United States with over 6,000 tractors and 13,000 trailers and a terminal network across the country. It's like an Uber for truckers. The program expanded to 951 trucks last quarter and is on pace to hit its target of 1,500 by the end of the year. The program has already driven 26% higher miles per week from drivers and a 61% improvement in driver turnover, which is that year-long driver storage. Is a game changer. The acquisition of transportation data services last month builds on its cloud software tools to further increase that productivity. Now the entire trucking industry should have a really good year on the rebound in retail sales and consumer spending if it can fix just its driver storage. That's actually why USX is one of the interesting stocks we have seen in a long time. The company's variant program is an app-based model using AI on digital platform to revolutionize trucking. It's a third multiple you find on shares of Schneider National on a sales basis and half of the PE ratio. Now it seems like that discount and valuation is just on the uncertainty around the variant rollout, but if the company can execute on that program, it could revolutionize trucking, and this could be a $25 or a $35 stock by the end of the year. We discussed today how to choose best small cap stocks, as well as we share information about 3 best small cap stocks. Now we will talk about current prices of these stocks and target prices as well. First stock is Nexa Resources, ticker Nexa. Current price $8.86. Target price $19.76. Second stock is PA&E Incorporated, ticker PA&E. Current price $9.07. Target price $18.75. Third stock is Express Enterprises, ticker USX. Current price is $10.07. Target price $25.35. Thank you for watching this video. If this video is informative for you, like this video, share it, and don't forget to subscribe our channel. Check out description to get more details about Wall Street Ruler.